The following is a presentation of TFNN. Trade what you see with Larry Pesavento. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. Now, Larry Pesavento.
Okay, looking good, Billy Ray. Feeling good, Lewis. We're going to take a look at this German DAX on a daily basis. You can see we've been in a downtrend for quite some time. We've had a little bit of a bounce here. And so we're going to see if that's going to be some type of a top here on the daily. If we take a look here at the FTSE, we're seeing pretty much the same thing on the daily. We're almost at a 50, well, we're just a little above the 50% level. You'll see the 61% level comes in at 74.25. Whether that's going to happen or not, we'll have to wait and see, because these ABCs that you're seeing here, even though they're pretty significant, because the first one was 3 days down, the second one is 4 days down. So this is a very important pattern that we have, completing here in the FTSE. So keep a very, very close eye on that if you trade the FTSE. Now, I've been asked to tell some of the most amazing stories of my China experiences, and boy, there's been a lot of them. But the person asked the most emotional one. There were a couple, but the one that I remember the most was I had given several speeches in Chengdu, China. It's south of Beijing. It's a really large city, a very nice city, and I got to be friends with the college professor there and his wife. And they had a little boy named Andy, and a nice little kid, and he loved speaking English. So they would have me over for dinner, and I would talk to him about what life was like, and I'd bring him little, things for his education when I went back to China. Well, if you'll remember, about 10 years ago or more, there was a big earthquake in Chengdu, China, and the school where Andy went to school was demolished, and all 400 and some kids were killed. I didn't get in touch with him until the internet and stuff came back about a week or so later, maybe even longer. And I asked, how everything was going, and he told me this amazing story, about all the children that had died and everything, and their family was at the house, and they were mourning like crazy and everything. And Andy opened the door. He had gone fishing with 3 of his buddies. They were the only 3 kids that made it through, if you can believe that. And anyway, when he opened the door, everybody started screaming, and he got scared because he thought he was in trouble for skipping school, and so he ran away. And it took a while to catch him, but he was okay, and it turned out to be all right. But that was the one time where skipping school actually did pretty good. He's in college now and doing quite well. But what an amazing thing. That was really that was very emotional, because I was sure that he didn't make it. Because anyway, let's move on to some of the things that's going on. Folks, when I do this newsletter each week, the 24/7, what I try to do is to take a look at a theme of what could be going on in some of these markets. And of course, we looked at the currencies very, very closely this week. Of course, the British pound was one that was pretty much spot on that we were watching, along with the euro and some of the others. But if we take a look at this British pound up here, it was trading around this 143 and change level. And now we're trading down several hundred pips from that level. So that's what we try to do. But one of the big things this week, of course, was the Treasury bonds, because we had had this big rally a few weeks ago. It stopped right at the exact rally of the other. That's where we instituted the short position in the Treasury bonds. The market broke off, rallied up, and then came down again. And now we're trading below. We're almost ready to break below the 143 level. We're trading at 143.15, folks. Below 142 really does set up 129. If you'll just do that ABCD structure, that's pretty much what you'd be looking at, I think. This long-term picture in the bonds is extremely negative, and notes is even worse. I mean, they're even that's even a more bearish pattern. They couldn't even rally 2 points. And that's very, very negative from a technical standpoint as we look at these charts. So watch that. We don't try to be right on everything, but we try to give an idea of what we're looking at. And remember, it's all on pattern recognition. It has nothing to do, with the fundamentals or anything like that. It's just looking at the patterns and seeing what the ratios are, and we have an idea, a rough idea, of course, what some of these patterns are going to do, but the expectation is positive. It's better than 60%, and if you could hit 60% in baseball, you'd certainly have a few statues put in your favor somewhere. But let's take a look here at another one that we looked at, and that was the euro. And the reason why we thought this was important was the fact that we were up here, we'd rallied 5 days. Now what we did is we went up and touched that, almost touched that. We did touch the 124 level, just a tad under it, I believe, matching the old high, and then we gave up the ghost. So we'll see. If someone's asking a question, let us know the times when I don't think I'm not going to be right. Okay, Gator, I'll try to do that. Unfortunately, that's eluded me my whole life. So you just never know when you're going to be right or wrong. And that's what trading is all about, folks. It's not being right or wrong. It's focusing on how much money you have at risk. Don't worry whether you're going to be right or wrong. Focus on what you're doing at the right time. That's why watching the monitor all day is really tough. Those of you that watch the monitor all day, I could tell you I could increase your profitability tenfold if you would just stop watching the monitor. Find the pattern, put on the trade, and don't look at it. You're going to find it really hard to believe, but nobody else gives a darn whether you're in the position or not. Think about that for a minute. That's really it's really an amazing thing to think about. So watch it. It's very, very important to know that you don't want to watch that monitor. The monitor is not your friend. The monitor is your mortal enemy, because what you're doing is you're looking into a mirror. You're not looking into a monitor. And what it's doing is reflecting all of the things that are going on in your life, your children, your spouse, whatever it happens to be. Whatever it is, you're thinking about that. And if you're long, you focus on the upticks. And if you're short, you're focused on the downticks. And the reason why you do that is because you like to stay away from pain. And if you're short and the market goes up, that's pain. If you're long, the market goes down, that's pain. So try not to watch the monitor. The only way you can break yourself away from it is to use baby steps. And baby steps is you take a little bit of a time. Stop watching the monitor for 10 minutes. Then stop watching the monitor for 15. Get out to a half hour, and you're going to be in pretty good shape. Now, what you can do is you can go and look at your monitor 30 minutes later, and that's fine. Now, what I mean by looking at the monitor, don't look at the monitor of the thing you're trading. If you want to learn something and watch how markets move, go look at something totally different. Like if you're in wheat, go look at the Swiss franc or the euro and learn what the euro is doing, but don't focus on that Swiss franc, because that's where your problem is. And you'd be able to see that would have been pretty good. Oh well, you'll make it back, William. So don't worry about it. Okay, let's move on here to a couple of things here right after the break. 877-927-6648.
The TAS Profile Scanner Plus, developed by John Logan and his team, is a standalone piece of software that can change the way you trade. Let the TAS Profile Scanner work for you by scanning over 5,000 financial instruments such as stocks, ETFs, commodities, futures, and Forex. Right now, you can get a 30-day free trial to the TAS Profile Scanner Plus right at TFNN.com. And when you sign up, you gain instant access to John Logan's most recent webinar, How Price, Volume, and Time Make Market Profiles So Unique. This hour-long webinar with John Logan will walk you through the most powerful features of the scanner and how you can use it to become a more successful and profitable trader. You pay absolutely nothing for 30 days while you try out this software risk-free. For more information on the TAS Profile Scanner and to get your 30-day free trial today, visit the front page of TFNN.com.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, we're back, folks, and I believe we have John from Philadelphia on the line. Mr. Z, are you there?
Good morning, Larry.
Good morning to you, my friend. What can I do for you?
Say, I have never met personally nor heard speak, so I'm very much looking forward to listening to Jim Bartolioni give his webinar next week.
Oh, yes, he's a really nice fellow, very entertaining, very funny, and boy, he certainly has gone into the esoteric part of these charts and taken ABCD beyond a level that any of us have really seen and how it all fits together. It's really quite cool because it's a combination of sacred science and Fibonacci and vibration and harmony and music, and it does a great job. As you know, he was an F-14 Tomcat pilot. And, of course, those guys that work with charts all the time usually do pretty good with trading. And he certainly has done that, but he also has gone into the research part of it. So it'll be something to really pay attention to because it's very interesting to see how much of it fits together. A lot of it's going to be pretty technical, but you'll be able to follow along with it without too much trouble, I'm sure.
Yes, thank you, and we'll look forward to that, of course. Larry, I'm calling in to ask you about the NASDAQ composite chart. Just for your benefit, I threw into the Tiger's Den some charts, quarterly, monthly, daily, and it was actually Jim. It was a chart Jim did back in March as the composites was making a high over 7,600. That he identified a beautiful Fibonacci 1618 expansion target being met. Well, that target's been met. We fell off into April 2nd. Now we've bounced. The bounce occurred into the 18th on Wednesday to 73.19 was the exact price. And interestingly enough, that's an exact Fibonacci 618 retracement. So
yep.
So that's just an observation. I just marvel at the precision of market prices with Fibonacci numbers from time to time. But my very specific question is, please, and just to let you know, I had shorted a stock index that day. My question is, using the composite, how would you handle managing what you hope to be a position swing trade lower off that composite test of 73.19 last Wednesday.
Okay, John, what I did was I posted the chart that you were just talking about in the NASDAQ 100, looking at that high we made at 73.19. That was an exact 61% retracement. But what I tried to do for the folks at 24/7, I've always felt that, the things that Amos Hofstadter talked about, like sell the weakest, buy the strongest, and Jesse Livermore did the same thing. The weakest of those indices, of course, had been the Dow Jones Industrial Average. So when the Dow Jones Industrial Average was, I believe, at 24,775, 780, something like that, that fulfilled the same sequence that we're seeing in the composite. So that's when I sent out the sell signal, 150-point stop, and then to see what happens, and it started to work. Whether it's going to continue or not, I don't know. But I tried to look at the one, because you have four indices. The S&P is the biggest, of course, and then you have the Russell, then you have the NASDAQ, and the last one, of course, is the Dow Jones, and it is the less risky than any of the others because it's only, 3 charts. Excuse me, it's only what am I not trying 3 charts? It's only 30 stocks, and so that's why it's a little bit easier to look at.
Okay, thank you on that. And so having shorted there, of course, anything can happen. The dip that we've had Thursday could be just something very short. Alternatively, it could be the start of a bigger decline. How, if you're playing for the scenario of a bigger decline, what do you advise doing in terms of using trailing stops with the objective of staying in the trade so long as it's profitable?
Well, John, at this point, you have a profit of about $750, but if you're looking for something bigger, which this pattern should give you, you've got to give it a little bit of flexibility, so your stop really can't change right now. You can lower it a little bit if you like to keep your risk down to about $250, is which we've done. But these markets are so volatile, you can get a 100-point rally in the Dow in a matter of a heartbeat if somebody says something or something moves in one particular market. So you've got to try to give it a little bit of, flexibility. We had that same situation when we were shorting the Canadian up in that 131 level. It stayed there for like 3 or 4 days before it finally rolled over to go down to 126. So it's hard to use a trailing stop unless the market really starts breaking in your favor. And I believe if you make more than $1,000 on something, which is usually twice what you're risking, then you can bring in the idea of a trailing stop. And I don't trail it like, $500. I trail it about 78% or $200. If you got $1,000, I'll move it down 200 and trail it that way so that you can still try to get in some of these moves, because you don't want to be over trading, but you want to try to get some of these things in your favor. And it's not an easy thing to do, as you know, but when it does work, and it does work longer term for big positions, about 2 out of 10 times, and those are the ones that really make it a lot of fun.
Yes, indeed. Thanks so much for that discussion on rules of thumb. I appreciate that. Larry, could I also ask you, just in parting, if either in this next segment or sometime before you close the show, if you can pull up the crude oil charts and
Sure.
show us where you see the short sale potential setups, keeping in mind that Bill Meridian cycles, at least according to him, are peaking right in this time frame.
Okay, I'd be happy to. John, I'll be happy to do that at the break, but I wanted to share with the listeners here one other chart that my good friend John Jameson uses that I think is really interesting. This is the Dow Jones, the top 10 stocks in the Dow Jones by price, John. In other words, it's only 1/3 of the stocks in the Dow Jones, and that that encompasses most of them because they're all price weighted. But you'll notice that the pattern is the same pattern that we're seeing in the NASDAQ, but it's even more bearish because it topped at the same time around that March, but it didn't get the big rally this last time. We've had 3 lower tops. Actually, we've had 3 distinct lower tops, and that tells you that the 10 top stocks in the Dow are not acting very well, which leads to you believe that, yes, we could be looking at, something more to the downside. That's the way it looks like from here.
Larry, thanks so much. We'll look forward to listening to Bartolone next week. That'll be great.
Thank you very much. Talk to you later, John. Thanks for calling in, and may God bless. Okay, folks, we're going to get ready here for another break, and then we want to get back, and I want to talk a little bit about the gold and the silver because some big things have happened, of course, and we're getting ready for those to, they're selling off a little bit now, which is not to be unexpected because of the numbers that we hit yesterday. But as we get closer into late April, early May, I think we're going to get a really good buying opportunity, especially in the gold. But the way some of these are acting, they're not acting bullish right now. 877-927-6648.
Larry Pesavento will be hosting a 90-minute webinar this coming Tuesday, April 24th for all Fibonacci 24/7 subscribers. Larry has teamed up with fellow trader Jim Bartolone for this informative 90-minute workshop, taking the ABCD pattern to the next level. Throughout this 90-minute live webinar, some of the topics Larry and Bart will be discussing include the origin of the 1.618, the golden mean, the relationship between numbers and cycles, time and price, the simple math behind market moves, and much, much more. This workshop will be archived if you can't attend live, and all new subscribers get a 30-day money-back guarantee when signing up for Fibonacci 24/7, so you have nothing to risk. For all the details and to sign up for Fibonacci 24/7 today while gaining access to Larry and Bart's webinar Taking the ABCD Pattern to the Next Level, visit the front page of TFNN.com now. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, next, folks, we're going to follow up with what John talked about when we were chatting just a minute ago about the crude oil. And I've posted the chart that we used on Saturday that went out on Sunday for the newsletter, showing the possibility of this triple top that we were looking at in the crude oil with the ABCD structure, of course, coming in. And what we'll do now is we'll just update that through today. And as you can see, we did get up to that 69 level. We're now trading, below 68 substantially. So that's the first sign that this could be working. But there was another sign that we also mentioned very strongly in the newsletter, and that is when you're trading crude oil, you should keep an eye on the gasoline and also the hold on one second, I've got to get it up here so I can get the right chart, and then everybody will be happy. And I think they'll be happy if I can find it, and I found it. So just give me 1 second here. And this is the heating oil. And if you'll notice in the heating oil, even though we were making new highs in crude by a 1.27 expansion, all we were doing in the heating oil was making a double top. And the heating oil, of course, started down first and has, continued down. Now, all this will fail if they go up and make new highs from this level. But right now, the patterns have been complete. They've started in the right direction. And whether this is going to happen or not, we'll have to wait and see. But the important thing to remember is the fact that when we made that 1.27 in that crude oil contract, that was a all near spot on perfect 3-drive ABCD pattern, which is one of our favorite patterns, because at that point you have 4 numbers coming together telling you that ratio or cycle is coming to an end. Now, many times they extend, but that's what stops are for, and you got to stand out of the way when it works that way. So just keep in mind that these are only probabilities that you have here. They're not certainties. That's absolutely for sure. One other thing that you wanted to watch here is if we took a look here at the gasoline contract, it also was completing a major ABCD pattern up in that same area. So in the complex for the crude oil, you had crude oil making new highs. The heating oil did not make new highs, and the other was at the was in the gasoline, which also made a 1.27 expansion. Regarding the Treasury bonds, folks, we've been through this so many times. It just looks very bearish. We went through this yesterday at length, ad nauseum, as many people reminded me. But the main thing is to keep in mind that they look like they're going to go a whole lot lower. That's the main thing, to watch. Now, the next one I want to cover here is going to get into the metals markets, and this is one of the ones that is dear to our heart. But if we take a look here at the platinum from yesterday, this is really important, folks, because yesterday platinum made a perfect. Now, we don't trade platinum very much, but boy, it really does a good job of picking the exact spots for bottoms in the precious metals. It really does. And a perfect example of that is December of last year. If you'll notice, the December of last year, we were making a perfect ABCD in platinum. I mean, spot on at 876. And you didn't see that bottom as easily in the silver. You did in the gold, but platinum was spot on. And so when we had that 382 level yesterday, and we've already broken $30 below the high, I mean, this is certainly telling you that that's a major ABCD there. And it equaled the rally that we had during February. But if you go in and take a look at what happened during October and November, you'll see another perfect ABCD pattern, again, right at the 382. And if you just go to the right just a little bit, these were at the same level, 960 an ounce. So that was a very, very important technical spot. That's why we focused on that, to show you that, look, something big is going on. If you watch that closely, that is a perfect head and shoulders pattern in the platinum from November of last year to the high in January to what we hit yesterday. It's got time and price written all over it. The prices are, nearly spot on. The right shoulder is about $2 an ounce under the left shoulder, which is what you like to see. You're right at a 382 retracement with ABCD structure. Nothing bullish about platinum, folks. And if platinum's not bullish, it's going to be hard for gold to be bullish. And we talked about the silver yesterday, the fact that when it broke out of that $17 an ounce level, the ABCD 1.618 expansion was $17.35. It didn't go a half a cent above it, folks. The high on silver was $17.35, and now we're a full 30 cents an ounce under that. So these ratios don't work all the time, but when they do work, they give you a pretty good idea some of the things that you could be looking at that would be really interesting. So pay attention to them, because when they work great, and when they don't work great. So watch it very, very closely. That's a key thing, to be watching for sure. Okay, now another one that we want to keep an eye on. Just give me a second here, and we will get back here to 1 second here. We got to get something moving here. I'm just checking. We're having a little bit of a rally here early in the morning into amateur hour. Well, just give me a second to double check what the prices are, because I got a few orders in that I'm looking at, and then I want to get back to the blah 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 blah. Let me try to get a judge's ruling on this. I want to get back to the E-mini, S&P and stuff, because it's been selling off while the Dow has been rallying, and that's partly because the Dow is only 30 stocks and they're weighted. So watch it very, very closely. It's interesting to see that many times when we're looking at some of these things, it gives you a really good shot at picking out something that is pretty exciting at times, and then other times it's not exciting. So let's move on to something else that someone's asked me about, and that is I know what it is. Someone asked me to bring up the chart of the soybean meal, because we've had a really interesting pattern here. This was also one right directly out of the hold on 1 second here. Right directly out of the newsletter, we had that 78% level retracement in the soybean meal. If you look at it closely, you'll see the 3-drive pattern that happened in late March, early April. It came right in exactly at that 394 level. We're now $2,500 below it, and we're setting right at a 61% retracement and right at a major support line at the Gartley level here at 371 a ton. So it's going to be really interesting what happens to soybean meal here, because if it breaks below 369, you're going to be looking at a potential of 340 a ton. And if we get that, we're going to set up a really big Gartley pattern on the long-term picture of the grain markets. But so far, that's still a little bit early. Today's key is going to be that $369 a ton level in the hold on, if you'll give me 1 second here. Boy, I've got an error running here, folks. So just bear with me here 1 second. Someone's asked me to bring up the chart about that chart that John Jameson gave us. I'll bring it up here so you can take a look at it. Basically, what this chart is, folks, this is the top 10 stocks in the Dow by price. None of the other Dow stocks are in there. It's just these stocks. It just shows you how weighted the Dow Jones is. That 10 stocks can control the Dow. 877-927-6648.
Would you like exposure to the foreign currency markets without any downside risk to your principal? Then consider the Petro Currencies Market Safe CD from Everbank. This 3-year U.S. dollar-denominated CD leverages the performance of 4 equally weighted currencies from these top oil-producing countries: Brazil, Canada, Mexico, and Russia. This CD features a 200% leverage factor, which means that your potential upside payment will be double the currency's average performance at maturity with no cap if the currencies increase in value over the CD's term. And if the returns are negative, your principal's 100% protected. Returns are based on CD performance with no correlation to the price of oil, and there is no annual percentage yield or periodic rate of interest on this index CD. The April 19th funding deadline will be here before you know it. So call 1-855-750-4051 or visit everbank.com/TFNN for the CD's term sheet and other important product details and disclosures. This advertisement is sponsored content. Everbank is a division of TIAA FSB, member FDIC.
TFNN has put together the finest programming lineup each trading day, featuring some of the most knowledgeable and respected financial minds in the nation to educate traders and investors. On Mondays, Wednesdays, and Fridays, we broadcast 8 hours a day, starting at 9 a.m. as Larry Pesavento kicks us off with Trade What You See. Tuesdays and Thursdays, we broadcast 11 hours. Get an early and healthy start to your day as Nico and Paige bring you Living a Primal Lifestyle. Then catch Andy Hecht at 5 p.m. with the Commodities Hour, following the Tom O'Brien Show. Swim lessons from TD Ameritrade Think or Swim is now at 11 a.m., followed by Basil Chapman at 12 noon. See the TFNN program lineup via the link on the front page of TFNN.com to get a complete overview of our TFNN shows and hosts. And keep TFNN's Tiger TV tuned in on your mobile device, PC, or Mac for the latest financial news and information throughout the broadcasting day. TFNN.com, educating investors.
Biotech is booming, but for how long? Whether you think the biotech bull has room to run or has run its course, trade LABU or LABD. Directions Daily S&P Biotech 3 times bull and bear ETFs. Visit directioninvestments.com/biotech today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
The Bull Bear Binary Option Hour, brought to you by Nadex. Next on TFNN.
Okay, we're back, folks, and I just got a text from our good friend Rich Anderson telling me that the downtrend line in that long-term gold-silver ratio has been broken. That tells us silver should start to weaken to gold. Gold should start to weaken to silver, which is in fact what it has been happening. Now, if you'll remember yesterday when we were bringing the situation in gold and silver, we were talking about it quite a bit because silver was, going absolutely nuts to the upside. You'll notice that 1.618 level that we were looking at up there at $17.35 an ounce was spot on. And this is an hourly chart. It was there for 3 hours, folks. And that's how much supply was in at that point. And now it's backed off quite a bit. You can see the difference in the gold. The gold was only making a 78% retracement when silver was making a 1.618 expansion, and platinum was making a 382 retracement on the long-term chart. So there was a huge divergence there, and that was one of the things that we were watching to ask ourselves, why isn't gold, participating, in this move when silver was doing so strongly? And that was just a what we called an alert or something like that. And now we've got the gold below $1,340 an ounce, and I still think we got a chance for one more washout in the gold market. My assumption or hope, and hope is a terrible trading word to use, is to see gold get around the 1285 level. We're going to be looking for a place to get short gold here because this had every chance to really get going, and with that 382 in the platinum, that's telling you that cycle is flat out important. So we'll be watching for a very close spot here to potentially get in the short side, of the gold market. Regarding the Treasury bonds, folks, I know people we're happen to be short that. We're looking for a lot lower prices, but the main thing to keep in mind is that the short-term bonds are very, very good to trade. They really are. They really have some really good swings in there. You don't have to risk very much. And another thing that's really super great about this is the fact that the margin on the Treasury bonds is, a whole lot less than you have to use when you're trading the S&P or the crude oil, something like that. So your margins are 50% less, and then you'll be able to see what's going on with that. So keep in mind that the margins are very, very important when you're trading these things, and of course the currencies hands down are the best because you got a $100,000 contract and your day trade margin on that is around $400. So, and you can use a stop of $400, so you don't have to risk very much, which is really good. But the profit potential is certainly there. The key is you've got to be right more than you're wrong, because if you fail to do that, you'll be not doing too well over the long term, and that's something that you try not to try not to let happen. So watch that closely as far as when you want to do trading, about how much money you're going to risk, not how much money you're going to make. It's a really, really big difference. That's a key thing, to keep looking at. I want to bring up, just to show you what happened yesterday in the gold-silver ratio. This was the chart that my good friend Rich Anderson sent on to me. But you'll notice this weekly gold-silver ratio. What happened here? And today we've broken that downtrend line. So that tells us that this thing is not ready to go higher yet. That was another reason to to see how these things were going to act. So anyway, that's all we can do is just, control how much money we're going to risk, not how much money we're going to make. I think probably the best example of that is looking at Lance Armstrong. He had a chance of a $100 million lawsuit, and he settles it for $5 million. That means he's probably still pocketed $55 million. So who knows? Anyway, we'll go on from here. Some people have asked me to comment on the political environment and how it relates to the market. Folks, if I did that, I'd probably have to keep a plastic emesis basin next to me. Those of you that are not familiar with an emesis basin, it's used in the hospital when a person gets an upset stomach. So that's sick stuff. So I don't really want to get into. All I know is they react to the news sometimes on what's going on, but frankly, over the long term, it's the larger cycles that are out there that make everything work. So just follow the patterns. Don't worry about the rest of it, and it should work out with you. Over a period of time. The euro continues to cascade to the downside. The dollar is strengthening, much like what we thought was going to happen. And this tells us, the gold is now down more than $24 from the high that we made just the other day. And we have a big ABCD structure coming in on the gold here very, very shortly. I don't think it'll happen today, but it certainly could, because it's not that far away. It's only $12 away. I'll post this in so you can take a look at it. But this is where I think it's going to go. I'll be looking at it from the long side at that point, I think. But I have to wait and see what some of these other markets are doing also. So give me a second here, and I'll put this in. You'll be able to see that's the ABCD. You'll see the 78% level that we hit. And then that was a beautiful ABCD pattern also, and now we're heading down, which I believe is the 1326 level, and I think that will be pretty close to a 61% retracement of the whole move down from 1302. So that'll be a very interesting pattern here to keep an eye on here in the gold, especially if it takes a few more days to get there. You don't want to get there too fast, because that's the falling knife syndrome, and you don't want to stand in front of that falling knife. Let the knife stick in the ground. Those of you that ever played mumbly peg when you were a kid, you always wanted to let that knife land in the grass before it was going to be, to be hit. So we'll see if that's going to be the case. Someone's asked a question of what am I looking for on the upside of gold. I believe that the upside of gold has a potential to go, a lot higher, at least $150 higher. And we'll look at, hold on, Rich is asking me a question. Hold on, I want to put this in. 1328, just a second. Oh dear, I'm dyslexic here today. Hold on, 1320, I'll call that 26. Okay. There we go. We'll try to have Rich on soon, but he's in the midst of doing some things out of the state, so he's very busy, and Cy Monley's very busy right now. So as soon as Cy is free, we're going to have him on to talk about the grains, because we think we've got a really long-term picture, working in that makes it look like it's going to be, really exciting in the spring. And we're starting to get ready to plant beans now. They're in certain areas. They are planting the beans, so it's important to keep an eye on that as we look at some of these things. Someone's asking me the question about Apple. I haven't really looked at Apple in a long time, but it's been in a bearish mode and like most of the NASDAQ stocks, but that's neither here nor there. Folks, these are just patterns. I don't follow the fundamentals. I say that, at least 3 to 5 times a week. I know you get tired of hearing it, but I just look at this stuff from the things. Now, people bring me information. Sometimes I look at it. Most of the times I glance at it. But, if you start thinking you know something about fundamentals, you're building yourself into a really tough corner. That's my 2 cents worth. 877-927-6648.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters. Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, folks, we're going to take a look now at the Australian dollar. We tried to buy that a week and a half ago down at that 76.35 level. We missed it by about 8 pips. And the market rallied 150 points. You'll see it stopped exactly at the 61% retracement last Friday, and now we're testing the lows again. We're getting really close to taking that out. I would not be buying on at this level now because we had a 2-week rally. I mean, this is really a dead cat bounce. And it's really something that makes it very suspicious from the long side. This is also leading the situation where we're looking at a potential for the U.S. dollar to get extremely strong here and the euro to get extremely weak. and that's what we're seeing, which means interest rates are going higher because people need to convert that money into dollars to buy the bonds, and so we'll see. And here they are buying bonds for the yield, and they're going down. That doesn't make any sense to me, but that's the way it is, so you can't really fade it very much. So keep an eye on some of these things. They have a tendency to reverse right away, but some of these charts look exceedingly bearish, and whether that's going to continue or not, we'll have to wait and see. But first of all, the bonds look extremely bearish, i.e. higher interest rates. The dollar is looking more and more bullish, i.e. lower euro, and also the gold looks lower when we relate it to the gold-silver ratio, to silver, and also, to platinum. So those are the things that we're going to be focusing on in the coming week, because we've got some big trends coming here. Also, we're probably going to be issuing a special report on the grain sometime between now and the 1st of May for our 24/7 folks, and that'll be interesting to look at, because we're going to look at beans, oil, meal, wheat, corn, Minneapolis wheat. We'll look at a whole lot of things to try to line things up for what could be happening with this growing season, because we never go through a growing season without at least one or two scares. So live every day in an attitude of gratitude, and may God bless.
Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks!